G'day traders, hopefully only a 1 minute mindset reset. It's going to be longer than 1 minute. Somebody said to rename it mindset reset, which is a good idea. So today we're talking about what if you could only take one trade and you had to risk everything that you had in your entire world on that one trade to save your child's life or your partner's life or your parents' life or somebody important to you's life, and you can only take one trade. And this is a great way to think because it gets traders to really understand the difference between a 50-50 trade where they are going to buy or sell and it's 50-50 versus understanding when they're in a coiled market for an explosive move that's driven by other time frame traders, longer time frame traders, hourly, 4-hour, daily, which again comes back to understanding the opening range and initial balance, because we have boundaries now that give us our initial high and low of the week. And again, a great question from a trader today was, what do you mean by out of balance and in balance? Well, as we talked about, Dalton market profile, in balance is when a market closes inside of the opening range. It stays in balance. So there hasn't been any dramatic change in a directional bias. There may be a breakout and a pullback and a close inside of the range, which again can signify that there is new business outside of that range, which is why we will often see day 3 parabolic moves back through initial failed breakouts. And traders have asked, well, why don't you call that day 1? Because day 1 breakouts are the actual day that the market closes outside of the range of a previous day, whether that be the opening range or a previous day's high or low. Hence the term day 1 breakouts. So we now have a market that is out of balance, and it potentially is in an area now where it can be at greatest risk of either returning back inside or continuing to stay out of balance. Hence day 2 breakouts and day 3 breakouts. The longer a market stays out of balance, the more likely we will have an opportunity for a reversal trade. Hence we saw that on the British pound on Monday morning. So some traders messaged me and said, oh, I was looking to sell the British pound on Friday, why didn't it go down? And I said this clearly to them. They often lose sight of it because they're looking for the trade on the day, but they lose sight of the fact that there's volume trapped outside of the previous day's range heading into the close of the week or heading into the close of a day. We saw this on non-farm payrolls. They held the volume up there one more day, and think about what they did on Monday. They broke the high and broke down from there. They triggered new breakout traders at the beginning of a weekly high and a weekly timing cycle. And some traders then messaged me and said, that's first red day. And I said to them, we're not looking for a first red day on a Monday because that's the opening range in a market that has not broken structure. And that is a great trap at the beginning of the week. Trigger breakouts, drop it 75, 100 pips, whatever, and then continue the move on day 2. That's our initial balance now. They broke out on day 2, and we see the continuation on day 3. Now, we haven't gone into the Fed yet, but through our London US session, it was continuing to go higher and higher, as we saw that on the euro as well. So when breakout traders are triggered into the markets, that is where we can get our most amount of information, because now we have traders that are either driving that move to continue the move, or we have volume now that's getting trapped outside of a range. And that is when we can see, if we have trapped traders at a daily low, weekly high, we can now track the first most likely target. If there is a reversal trade for hitting the stops, where is the money? Other time frame traders are driving that move if we get a setup. If we have a range expansion for a trend trade, same principles apply. We're outside of daily and weekly levels. We have hourly, 4-hour, daily, weekly traders potentially driving that move now for a range expansion. And as I mentioned this last week with gold, if there are no other time frame traders triggered into the markets, that market is primarily a day trader's market on that day, unless they're sitting for 3 days outside of levels. For example, we could be inside of a day, daily high low, but we've been sitting outside of a breakout for 2 or 3 days where they're trapping traders up high or down low and holding them there for a potential explosive either continuation or reversal trade. So coming back to the initial topic, if you could only take one trade. Start looking and cataloging these trading setups that repeat over and over again, and understand the ones that are coiled to explode. Anytime a market goes sideways, inside of a high or a low, after 3 sessions, especially whether that's US, Asia, London, Asia, London, New York, London, New York, Asia. If it's coiled sideways after putting in a high or putting in a low, dump and pump, pump and dump, those markets are coiling for explosions. If you're trying to cherry pick off tops and bottoms, then if you only could take one trade and risk everything that you had on it, start thinking that way before you take a trade. I don't even care if you're trading 0.01 lots, because if you can't do it with 0.01 lots, you can't do it with 1,000 lots. And that's the sort of trade setups you want to be targeting, ones that you could put 1,000 lots on and have the absolute understanding that that trade has a high 90-10 possibility of playing out with asymmetrical risk reward, very limited downside, and it should accelerate or move quickly in the direction of that trend bias that or that trade bias that you've positioned yourself into. Start thinking like that, because if you can't trade something that's scalable to that size, is it really 90-10, a 90-10 setup? And so coming back to understanding who's driving that explosive move. I put trade entries on a 1-minute chart, but they're being driven by other time frame traders. As soon as that penny drops and you have trap volume, most breakouts fail. And somebody said to me the other day, yeah, but when they succeed, they really make you a lot of money. You've missed the idea completely. It's the same thing. It's a box. And whether you break out of the box and do a range expansion, or it reverses from that box and goes to the other side, it's the same thing. It's a lot of breakouts fail. And the ones that do reverse and come out of large rectangles, either at bottoms or tops, have the potential to do 200, maybe 300% expansions of those range for 10, in some cases 20 to 1 return on those trade setups. We see it at high week, low week opportunities, day 1, day 2, day 3, free cash Wednesday. Today, there was opportunities on gold, there was opportunities on oil, there was opportunities earlier in the day on other sessions, there was opportunities on the major pairs for continuation trades after major red news. The Fed's coming up, and I don't trade the Fed. Could care less about what it does. But again, today the Fed can act as either a day 1 pump or a day 1 dump if we get an explosive high-low of the day, high-low of the week type of Fed release. And then that can set us up for Free Cash Friday. So have a think about that, because Free Cash Friday might be the easy money that people, if they haven't been chopped up through the week, hopefully they're not, they come in on Friday. And as I said, we got major red news at 10 a.m. We could have a first hour trade in gold that could go for 2 hours after the New York Open right up to 10 a.m. for a reversal trade, or they may jam them in and hold them down lower up high for some kind of explosive reversal or continuation trade. But typically, we'll see something, especially if there's movement today. Free Cash Friday coming up. Congratulations to traders who nailed trades today. There was opportunities on several different instruments, different type of day. But again, it's a FOMC day, and anything's possible. So, which is why I just, after the first hour trade, called it a day. Not interested in hanging around. Like first hour, second hour, it looks like they're going to start holding volume there. And as the last time I checked, it's still sitting in the same between, I think, 75 and double zeros, or 75 and 50, and hasn't moved in the last 3 hours. So keep it simple. Remember, repeatable, simple, repeatable, reproducible, low stress, zero emotion. Understand when a market coils. Understand what 90-10 is. Because again, if you had to risk everything on one trade, I'm not saying that's what you would do, but understand the power behind a parabolic setup. Whether that's just on a news catalyst or after the news, like today, again, we talked about that. There's first bounce, there's first bar, and then after the news, if there's nothing significant that's happened, we go back to our normal trading strategy, which again, 5 minutes after the news, we had our pin low and an engulfment inside of our EMA for a dump and pump setup, higher high in London, that exploded back up to shorts from Tuesday's US session. And just on that, on the news itself, understand anything can happen. They could have exploded down. We had plenty of room on the downside on the daily. We are in a consolidation between the monthly high and low. Third push down on the daily chart. And we can still see that on the Fed. There's plenty of room on the downside. There's plenty of room on the upside. And before the major red news, it can do anything. It could have exploded and gave us a first bounce trade short. It could have exploded, gave us a first bounce trade long. It didn't. It just whipped back and forth inside of the high-low, coiled sideways after 5 minutes inside of our EMA for an engulfment and an explosive move back into yesterday's US session shorts. Where is the money? Who's in profits? And right now, as far as I can see, the only people in profit are the traders from the first hour news. And by the time I get home from the Fed, I'm sure they're going to be already stocked out. So if you haven't locked in the money, take the money and run and come back. And free cash Fridays in a couple of days, we might see big free cash Thursday. So focus on the 90-10. Keep this right. Low stress, zero emotion. Rinse and repeat. Scale it up in size, traders. 1% better every single day. Keep it going and keep it growing. And may the markets go with you.